Hi everyone, Tony here from the Mortgage Agency. Today we're going to talk about how borrowing capacity differs from lender to lender. This is because different banks have different borrowing capacity and different policies which contribute to how much you can borrow. So, how does borrowing differ from lender to lender? There is never a one bank fits all approach. This is why using a mortgage broker is so powerful, because we have access to multiple lenders out on the market where we are able to provide you with just more than one option. Different banks have different assessment rates and different policies in how we treat income, assessment, and debts, which is why some lenders are able to provide you with more borrowing capacity than others. Let's first break down how banks treat base, full-time, and part-time income. This income is generally used at 100%. There is no shading on it at all. Non-base income, such as overtime, commission, rental income, bonus, and allowances is generally shaded to 80% or capped at a certain level to be used. However, there are some lenders out there that will use 100% of these incomes. Hence, why we say some lenders are able to give you more borrowing than another. For essential workers, such as nurse, doctors, or police force, any overtime shift allowance will not be shaded at all, and 100% of this income will be used. Casual income. Some lenders will only use up to 48 weeks of your yearly annualized income, while some are happy to use 52 weeks of this income. This is why I say using a mortgage broker is very beneficial, as it allows you to maximize your borrowing power. How do mortgage brokers maximize your borrowing power? We have multiple lenders under our panel we can use. We understand their policy, so we know how to take advantage of working out the best solution for you. We maximize your borrowing capacity with different scenarios and different lenders when you're trying to grow your investment portfolio through major, mainstream, second tier, and third tier lenders. Let me give you an example. We have a young couple with one dependent, both on $80,000 each, and both receive a $10K bonus each year. The only debt they hold is a $10,000 credit card limit. What they want to do is they want to buy their first owner-occupied property with a loan of $600,000, paying principal and interest. So, after purchasing the owner-occupier, they want to see how many properties they can buy with getting a loan of $350,000 each, with a rental return of a minimum $400 per week. We are going to take on the assumption that deposit is not an issue. In addition, we are going to use a 5% interest rate in this example. Now, with a mainstream lender, they can borrow up to $600,000 as an owner-occupier with no problems. However, as an additional investment loan, the max they can borrow is only $350,000 at interest only. No other lending, as they are capped with the mainstream lenders. Now, to obtain more lending, they have to go to a second tier lender. This second tier lender will use 100% of the commission income and also assess the negative gearing benefits with the same rate as the assessment rate. And by applying $400 per week on rental income, they can actually get an additional loan of up to $500,000. Now, because they are capped with a second tier lender, they will now need to go to a third tier lender. Similar to the second tier lender, this third tier lender will use 100% of the commission. However, the major difference is they will use actual repayments plus a little buffer, while other lenders will assess the existing debt based on the remaining principal and interest term. Now, because we are using a third tier lender, I have applied a higher assessment rate of 6% instead of 5%. With a rental income of $350 per week, they're actually allowed to obtain an additional $300,000 in loan. As you can see, by using a mortgage broker that has access to multiple lenders and taking advantage of using different lenders' policies, it allowed these couple to obtain 3 investment properties. While if you went to the bank directly to do it yourself, not knowing what is available for you outside in the market, you will only be able to obtain 1 investment property with that mainstream lender. This is a no-brainer why you will not use a mortgage broker when this service can be free of charge to you. Please note that this should only be used as a guide and not be taken as financial advice, as each scenario and each situation is different from one person to another. Hope you've learned something today, and we hope to see you soon.